All right, let's just dive right into this. Welcome to today's explainer. I'm going to put on my conservative financial analyst hat for a bit here, because we really need to look at one of the most heavily scrutinized market debuts we've seen in recent memory. I'm talking about the Cerebras Systems IPO. These guys just pulled off a massive $5.55 billion raise, pricing their shares way above expectations at $185 each. That gives this AI chipmaker a staggering, fully diluted valuation of $56.4 billion. But the big question we have to answer for retail investors who are considering this for their portfolios is simply this. Is Cerebras a true, viable competitor to the mighty Nvidia? Or is this the most high-stakes gamble currently sitting on the stock market? Well, let's find out. So here's our roadmap for the explainer today. 1. The AI IPO tsunami. 2. The Wafer Scale Superchip. 3. Billions in cloud deal backlog. 4. Customer concentration and execution risk. 5. The TSMC supply chain bottleneck. And finally, 6. Valuing the AI chip challenger. Okay, Section 1. The AI IPO tsunami. Capital rotating to AI. Just look at this stark contrast. U.S. equities have become the absolute undisputed destination for risk capital right now. Check out these year-to-date semiconductor gains. Intel is up 218%, AMD has more than doubled, and the broader Philadelphia Semiconductor Index up 66%. But then, look over on the right side, Bitcoin has actually dropped 12%, languishing below $80,000. What we're seeing is retail interest really fading in those struggling crypto markets, as capital just completely rotates over into the semiconductor and AI equity space. The Financial Times actually hit the nail on the head here. They called the Cerebras IPO an early test of Wall Street's appetite for new AI listings. See, Cerebras is kind of acting as a gravitational pull right now. It's testing the waters for what's going to be an absolute flood of risk capital, just waiting to back the anticipated debuts of tech giants like SpaceX, Anthropic, and of course, OpenAI. Moving on to Section 2, the Wafer Scale Superchip, a radical hardware shift. Let's define the actual weapon Cerebras is bringing to the fight, the Wafer Scale Engine. Traditionally, semiconductor companies take a 12-inch silicon wafer and they slice it up into dozens or even hundreds of individual chips. But Cerebras, they don't do that at all. They use the entire 12-inch silicon wafer as one single continuous microchip. Think of it like, well, taking the entire pizza instead of just serving a single slice. They are completely bypassing traditional GPU cluster architecture. It really builds this whole David versus Goliath narrative, except in this case, David is physically massive. When you compare it to Nvidia's industry-standard Blackwell B200 package, the Cerebras chip is roughly 30 times the physical size. 30 times! It packs 19 times as many transistors onto a single continuous surface. It's just a staggering physical scale that fundamentally changes how the computing actually happens. So you might be wondering, what does that massive size actually get you? Well, because the connections between the logic cores and the memory are etched directly into one continuous piece of silicon, data gets processed significantly faster. Plus, it uses drastically lower power. There's far less overhead needed for networking, and it practically eliminates those annoying interconnect delays you get when you have to wire thousands of separate, smaller chips together. For AI inference tasks, actually running the AI models, this is a massive technological advantage. Section 3. Billions in cloud deal backlog, multi-billion demand.
$24.6 billion. Let that sink in for a second. That is the staggering backlog Cerebras had already secured by the end of 2025. For a company that is just making its public debut, having over $24 billion in contracted future revenue, that is an absolute head-turner. It signals immense, undeniable market demand.
So let's break down where that huge number actually comes from. The lion's share is this crazy $20 billion agreement to provide 750 megawatts of computing capacity directly for OpenAI, mapped out between 2026 and 2028. They also secured a massive strategic partnership with Amazon AWS, where Cerebras chips are going to run right alongside Amazon's own Trainium chips. But notice the absolute most vital takeaway here. This backlog represents a massive strategic pivot. Cerebras isn't just selling hardware anymore. They are pivoting to become an AI cloud services provider, taking on giants like Microsoft and Google Cloud directly. All right, Section 4, Customer Concentration and Execution Risk. Severe financial risks. Okay, here is where the warning lights really start flashing for us conservative investors. Last year, a staggering 62% of their revenue came from one single source, the Mohammed bin Zayed University of Artificial Intelligence over in the UAE. Another 24% came from the UAE-based tech firm G42. Now, to be fair, they have dropped their reliance on G42 from an even scarier 85% in previous years. But this still perfectly demonstrates an alarming customer concentration risk. I mean, if just one of these relationships sours, the company's current top-line revenue could literally collapse.
And then we have to talk about the execution risk of this new direction they're taking. To fulfill that amazing OpenAI contract we talked about, Cerebras has to stand up 250 megawatts of computing capacity by the end of this year. The catch? Cerebras management has never built or operated a data center of this massive scale before. Transitioning from chip design to suddenly running massive-scale data center infrastructure is incredibly difficult. It's a bit like asking a brilliant engine designer to suddenly go out and build and manage an entire Formula One racetrack. Any hiccups in scaling could seriously jeopardize their biggest contract.
Section 5. The TSMC Supply Chain Bottleneck. Manufacturing Risks.
This step-by-step breakdown explains their biggest bottleneck perfectly. Step 1. Cerebras' incredible wafer-scale chips rely entirely on Taiwan Semiconductor Manufacturing's N5 process. And frankly, no one else out there can viably manufacture a chip this big. Step 2. TSMC is currently facing completely unprecedented global demand, and they're actively retrofitting their facilities to prioritize newer, leading-edge N3 and N2 nodes, which leads us to Step 3. TSMC is actually reducing its N5 capacity. Think about that. Cerebras is trying to aggressively scale up their demands right at the exact moment their single, absolutely indispensable manufacturer is scaling down the specific production line they require. That is a massive, absolutely crucial supply chain risk.
Section 6. Valuing the AI chip challenger. Priced for perfection? Look at the sheer valuation premium the market is currently assigning to Cerebras. Based on that $56.4 billion valuation, Cerebras is trading at roughly 96 times its sales. 96! Compare that directly to the highly profitable, established industry incumbents. Broadcom is sitting at 29 times sales. The absolute kingmaker, Nvidia, they're at 25 times sales. AMD is at 19 times. Cerebras is basically demanding a premium nearly 4 times higher than Nvidia's. But to provide some fair context here, let's look at the growth projections. Why pay 96 times sales? Well, because with that massive backlog, Cerebras actually has the potential for 10x revenue growth in just a few short years if they execute flawlessly. Meanwhile, Broadcom and AMD are projected to double their revenue, and Nvidia is projected to grow by an impressive but relatively smaller 57%. However, we have to remember the established giants offer vastly lower execution risk, beautifully diversified customer bases, and deeply proven manufacturing pipelines. So this brings us to the ultimate question for your retail portfolio. You really have to weigh this absolutely revolutionary wafer scale technology and that mouth-watering $24.6 billion backlog against the severe customer concentration, totally unproven data center execution, and a highly vulnerable TSMC supply chain. So at a $56.4 billion valuation with a 96 times sales premium, is Cerebras the undisputed future of AI infrastructure that's going to finally dethrone Nvidia, or is it currently the market's riskiest bet? It is a fascinating standoff for sure, and definitely one we're going to be watching very, very closely. Thanks so much for joining me on this explainer, and keep learning.